The situation is extremely difficult, and the arguments either way are very, very finely balanced.
We're ready to move forward and get this done and work like hell to do that. With Senator Manchin,
I think complacency is the biggest risk.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, standing in for Francine Lacqua. Here's what's coming up on today's program. European stocks rebound. Traders bet that vaccines can help tame Omicron and that Joe Biden can revive his $2 trillion economic agenda. Wait and see. Boris Johnson holds off ordering stricter curbs before Christmas amid a surge in Omicron cases. And Lira whipsaw. The Turkish currency goes on a wild ride after President Erdogan announces support measures. Well, good morning. Happy Tuesday. Happy turnaround Tuesday to you. We are seeing some stabilization in these markets. After back-to-back losses of more than 1% for most of the equity markets yesterday, we are looking at a rebound. But to be fair, it's not completely making up for what we've seen. Is the buy the dip story still intact? It was effective about 68% of the time, judging by the S&P 500 for all of 2021. And again, that's measured by its ability to make up for those losses. So we haven't yet. European stock 600 up 0.9%, similar for the NASDAQ, leading the gains in terms of your American E-mini futures session. Two assets that really stand out this morning. One is natural gas. These are Dutch front-month futures, gaining some 7%. Not only is it very cold in Europe, that is contributing to what this is a record price, but we have also seen supply from Russia start to slow. One of the key pipelines that flows from Russia to Germany has halted to zero so far this morning, and we're also seeing German wind output at a 5-week low. So all those factors together mean that we're continuing to see this march higher in European energy prices. It's this energy crisis we've been talking about for much of the past month. Now, we're also looking at the lira. Starting this morning, very, very early this morning, we were looking at continued gains for the lira. It's now weaker. This, of course, is on the back of a more than 20% surge yesterday. Erdogan stepping in with some measures to help support retail investors, that retail confidence in the lira. But so far, it's not holding up. I do want to point out, speaking of which, if you look at Turkey Stock Exchange, the Istanbul Borsa down basically at 5%. That is the level that triggers a circuit breaker. We saw that happen yesterday as well. So it's significant that the story is moving, not just a lira story, but to the stock market as well. Do the consequences go further into all of EM too? And as I say, the rest of Europe looking pretty green. Again, it's this rebound from yesterday's losses. Let's go ahead, though, and look at the sectors and movers as well, because in those you see this idea of demand, at least concerns about those starting to ease. The best performing sector is basic resources, up some 2.3%. Energy also doing well. We also see financials outperforming today, maybe a little bit of the curve steepener coming in. Also, some of your individual movers, we have Bolloré there. It's the industrial goods and services holding companies founded by the French billionaire Vincent Bolloré. It's received an offer from a container and logistics company. MSC is the name of it, and it's to acquire its logistic assets in Africa. So that's the positivity there. So that's the biggest gainer. The biggest faller, though, is Zur Rose. It's a Swiss online pharmacy retailer. Bader, the brokerage firm, removed it from its top picks list, and that's because Germany is delaying this mandate to have e-prescriptions. It was supposed to come into effect January 1st. It's no longer doing so. The brokerage firm says that this creates high uncertainty. Now, back to our top story, and Omicron has become the dominant strain in the U.S., accounting for 73% of all sequence cases, up from around 3% last week. And in the UK, where the variant is surging, Boris Johnson held off introducing stricter rules.
The situation is extremely difficult, and the arguments either way are very, very finely balanced. We agreed that we should keep the data from now on under constant review, keep following it hour by hour.
We're joined now by Morgane Deladon, Director of Research at Global X ETFs, and of course by Bloomberg's Christine Aquino. Thank you both for joining us this morning. Let's start out with the action we've seen so far. And Christine, I want to dig through this morning's markets. We talked about yesterday, these continued declines. What are you seeing in terms of volume and liquidity in today's turnaround? Does it suggest anything to you about whether it has lasting power?
Well, Danny, I think we're very much into that year-end holiday period of very, very thin volumes, very thin liquidity. And so I wouldn't be surprised if the turnaround Tuesday that we're seeing today fades into the next couple of sessions, especially as traders head into their holidays. And so I think it's a very salient question to be asking right now as well. Really, how sustainable are these turnarounds that we're seeing? And I found it equally fascinating, the stat that you cited earlier, where it seems like the buy the dip strategy is really showing a few cracks here. And it's quite important to note that we're heading really into a year where there are many, many big questions that will be left unanswered, whether it pertains to how the Omicron situation unfolds or whether central banks can really proceed with this monumental shift towards hawkish policy. All these questions that are facing investors really heightening the uncertainty here. And I think all of that is playing into the question of sustainability in these rallies and whether we're going to see that heading into the 2022 opening trading sessions for sure.
Yeah, Christina, I want to take that exactly to Morgaine. Let me bring you into this conversation. Do you have any semblance of convictions on these markets at the moment? How unknown is the equity story to you, Morgaine?
Well, it's an excellent question, Danny. I think that the most important thing now is to fully assess the economic impact of Omicron, which is difficult to do right now because the number of cases are still growing and there is a lag between the number of cases and the hospitalization rate, which will be the key factor to watch early in the new year because it can lead to more restrictions. And depending on these numbers, there is a very different outlook for equity markets and income markets because if Omicron happens to be less severe in terms of death and hospitalization, then we will probably move into 2022 with increasing interest rates. Equity investors will be more discriminant between equities, more valuation focused, and probably favor more cyclical sectors. Whereas if the hospitalization rate is higher than expected and there is more restriction in place, then it kind of challenges the central bank's outlook, especially in Europe, in the UK, and in the US. And therefore, we will see potentially less of a focus on valuations and more of a continuation of what we already saw in 2021. So currently, it's extremely difficult to discriminate between both scenarios, but I would be more optimistic given the number of vaccinated people. And we saw early comments from most of the vaccine developers that have been saying that vaccines, and especially the third dose, is quite helpful and efficient to combat more severe cases.
Well, Morgaine, given all of that, I mean, that's a lot of variability we could see next year. What does that mean? If I can ask you to put on your ETF hat here, does that mean you can no longer just buy a broad benchmark, sit on it, and expect it to do well?
Not exactly. I think actually when you look at thematic investing, it's heavily focused on tech. And tech has been quite resilient so far, and we believe that they will continue to be quite resilient. The first reason is that in 2022, we see continuation inflation pressure, and tech has a strong ability to pass on high cost to consumers. And also, we see more supply chain disruptions, or at least a continuation of the disruptions in supply side. And tech has been quite resilient, again, because it's less vulnerable to supply chain disruptions.
Right.
Also, when you look at the software company, it has been also benefiting from larger scale with more people working from home.
I do wonder, Christine, obviously one of the factors in here as well, which Morgaine is speaking about when it comes to not just COVID, but tech, is what the Fed is doing. Obviously, higher interest rates means issues for those more highly valued companies. Do we have to enter an environment here or change our thinking to don't fight the Fed when it comes to the way down for equities, especially ones like tech?
Yeah, very good question, Danny. And I think, even the markets at this point aren't very convinced that the Fed is going to be able to do what they charted out for 2022. Because as you recall, we heard from Jay Powell last week indicating that the Fed is ready to hike rates at least 3 times into 2022. But we really haven't seen that follow through in rates pricing. And so I think there's a lot of questions as to whether they're even going to be able to do that. And as to how that pertains to the tech sector, I think, that's potentially good news if we see that the Fed is potentially not able to meet that 3 rate hike scenario that they set out for us. Because as you know, rate hikes are kind of the enemy of these high value, high growth sort of companies. And so it's going to be interesting how that plays into that sector heading into 2022 for sure.
All right, Christine, thank you so much. That's our very own Christine Aquino. Morgane, you're going to stick around with us. That's Morgane Deldon, Director of Research at Global X ETFs. Now, coming up, the UK's hospitality and retail sectors suffer from a loss of business. The government has yet to announce any new state aid. We look at the cost to the public because of the voluntary staying away next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, here in the UK, Boris Johnson held off introducing stricter COVID rules to clamp down on a surging new wave of the virus, but left open the prospect they'll be needed soon. Heading into the holiday season, the hospitality and retail sectors are suffering from a steep drop in sales due to the variant. But so far, they've received no state support. Let's bring in our Lizzie Burton, who's been taking a look at the government options. Lizzie, it was really fascinating. Prime Minister Boris Johnson has this very long meeting yesterday. I personally was bracing for potentially never being able to leave my flat, but in it, he didn't announce any new measures of support for the retail sector. So where does that leave the hospitality industry at this moment?
Well, we've just heard from Cabinet Office Minister Steve Barclay saying that the Chancellor Rishi Sunak's been engaging closely with business, that we're going to hear more about the economic impact of Omicron soon. But, as you say, we don't know how businesses are going to be supported. And even though we're not in a full lockdown in the UK, because people are voluntarily self-isolating, they're cancelling their bookings for hospitality and leisure. So the Wetherspoons founder, Tim Martin, has described it as lockdown by stealth. The question really is how the government is going to help, and how long it's going to maintain this line that the economy is still open when clearly businesses are already suffering.
Yeah, Tim Martin, not one to keep quiet on his opinions about lockdowns or voluntary lockdowns. So what tools does Rishi Sunak have at his disposal in order to support the hospitality sector, should they do this?
Well, lots of options. He could draw on measures that were already in place earlier in the pandemic, like the furlough scheme, and just target them at the worst hit sectors. He could extend measures that are already in place, like the moratorium on evictions for companies that can't afford their rents. He could simply boost the grants and give a cash injection for businesses that just need to get through this difficult period. So lots of options, but all eyes on the Treasury, because the Bank of England's already stepped up to help deal with inflation, to help deal with this cost of living crisis, which is really proving a thorn in the side of the UK government at a time when you've got this slew of headlines about it not following its own rules, which really voters feel.
Right. Lizzie, really fascinating stuff. Thank you so much, as always. That's Bloomberg's Lizzie Burton. Morgane Deldon, Director of Research at Global X ETFs, is still with us. Morgane, our reporter Lizzie there was just talking about the difficult situation that retailers in the UK find themselves in. I know this is a market that you look at, and in your notes, you said that the UK stands out with as the region with the highest risk of stagflation. What is the mix that you're seeing that leads to that evaluation?
Well, first of all, there is a combination of negative impact from Omicron, but also from Brexit. And the UK is still very dependent on imports and oil, so from the outside. So the risk of inflation is really pressing in the UK. And I think this is one of the reasons why the Bank of England acted preemptively to the Fed last week. We are seeing also the tightness in the labor market and in industries, especially dependent on European labor. We can see more tightness as the economy rebounds. So currently, we're seeing the PMI hovering just above the expansion threshold, while the inflation is picking up. It's more than double the rate targeted by the Bank of England. So all these factors highlight a higher risk of stagflation in the UK, particularly. Yes.
So given the risk of stagflation, if the BOE has already embarked on this rate hiking cycle, how short-lived will it be if it's hiking into a potentially weaker economy?
Well, this is, I think, a question for not just for the UK, but also for Europe and for the US. Is the tightening window closing? Because there are signs of the global economy approaching the end of the business cycle, with China slowing down, and also in the US, you notice the flattening of the yield curve, also an indication we're reaching the end of the cycle. So it's a very pressing issue. It seems that the window for increasing interest rate is very short. But on the flip side, if the demand is not there because of Omicron, then the inflation fueled by demand should fade in 2022, and therefore there will be less of a pressing issue, pressing moment to increase interest rates. But on the flip side, if the economy rebounds, we hope for a large rebound to avoid stagflation.
I think we're all hoping for a large rebound. Morgane, thank you so much for joining us this morning. That's Morgane Deldon, Director of Research at Global X ETFs. Now let's get to the Bloomberg First Word News. Here's Leanne Gerrans. Good morning, Leanne.
Good morning, Danny, and thank you. The Securities and Exchange Commission is cracking down on Chinese companies trading in the US. They must disclose more about the risks they pose for investors. The SEC said that recent events have highlighted the risks associated with investing in companies that are based in China or have the majority of their operations there. And in New York, the fate of British socialite Ghislaine Maxwell is now in the hands of the jury in a sex trafficking trial. Maxwell is charged with grooming underage girls for sexual abuse by the late financier Jeffrey Epstein, her former boyfriend and employer. If convicted, she could get up to 40 years in prison. Global news 24 hours a day on air and on Bloomberg QuickTake, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Danny.
Leanne, thanks so much. Leanne Gerrans there. Now, up next, Joe and Joe. The path may be more open for talks on Biden's $2 trillion economic plan after a phone call between the president and the Democratic senator for West Virginia, Joe Manchin. We discuss the outlook for the U.S. next. Senator Joe Manchin has outlined the key changes he's seeking after his surprise rejection of President Joe Biden's $2 trillion economic agenda. Now, this comes after news that President Biden and Manchin spoke on Sunday night. White House Press Secretary Jen Psaki says the administration will work with the West Virginia senator.
We're ready to move forward and get this done and work like hell to do that with Senator Manchin, with members of the Democratic caucus across the Democratic Party, and that's our focus moving forward.
Let's bring in our senior reporter, Bruce Einhorn. So, Bruce, walk us through what we know at this moment. Are we any closer to a potential negotiation that goes through?
Well, we're closer to a negotiation resuming. Whether it goes through is it remains to be seen. So what we know is that after Senator Manchin spoke on Fox News on Sunday and, dropped his bombshell saying, I'm not going to vote for this, then the president and the senator spoke on Sunday night. People in the White House are confident that this potentially opens the door to negotiations to resume between the senator and the president over finding some sort of a deal that Senator Manchin, the crucial 50th vote, could agree to.
And Bruce, I know this is something that you've been looking at as well. The risks of just concentrating on Joe Manchin and keeping him happy. What are they?
They're significant, right? Because it's a 50-50 Senate, and we know that no Republicans are going to vote for this deal regardless of what's in it. And so that means President Biden has to keep all 50 Democratic senators on side. So if Joe Manchin, for instance, says that he'd like to see more changes in the tax laws and revisiting some of the Trump tax cuts, that could be something that would be a deal breaker, say, for Arizona Senator Kyrsten Sinema, who in the past has expressed opposition to just those sort of things. So, you give to one senator and then another senator may raise his or her hand and say, well, this doesn't work for me. So there's just very little leeway for the White House and President Biden to get this through.
All right, Bruce, thank you very much for staying on top of this story for us. That's Bloomberg's Bruce Einhorn. Now, I do want to just mention that we have that circuit breaker on the Borsa Istanbul. It will open up in less than 30 seconds, so keep your eye on that. But also coming up, Omicron becomes the dominant strain in the U.S. We take a look at the virus situation with our own pharma analyst at Bloomberg Intelligence, Sam Fazeli. This is Bloomberg. European stocks rebound. Traders bet that vaccines can help tame Omicron and that Joe Biden can revive his $2 trillion economic agenda. Wait and see. Boris Johnson holds off ordering stricter curbs before Christmas amid a surge in Omicron cases. And Lira whipsaw. The Turkish currency goes on a wild ride after President Erdogan announces support measures. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, standing in for Francine Lacqua. Let's get a read of your market so far, and it is another turnaround Tuesday after a bruising 2 consecutive sessions. We're looking at gains of just under 1% for the European stocks index. Similar story here when it comes to U.S. futures. I will say that the Nasdaq is outperforming the S&P E-mini future session. So some of those bigger tech names, which have gotten hit very hardly over the past few days, are what's leading the gains. Not enough, though, to undo, again, those 2 days of consecutive declines. Now, the big movers here, one being natural gas. We're looking at natural gas futures hitting 158. This is the Dutch front month futures. Benchmark European prices, those are at 268. Both of those are at a record. It is very, very cold in Europe. Wind is low in Germany, and at the same time, Russia's supply of natural gas is thinning out. All of that leads to this ongoing energy crisis we're witnessing in Europe. So again, those at a record high. Now, the other asset that's gotten absolutely whipsawed is the lira. Only about 10-15 minutes ago, we were looking, or earlier in the day, we were looking at lira gains, then losses, and we're at gains again. Of course, that red is red because this is the dollar-lira pair, so it of course means the dollar is falling against the lira. So it is all after President Erdogan attempted to step in and help some retail enthusiasm, or their lack of the lira. So here's how it shapes up on map markets go. Mostly green, except for what you're seeing in the corner there. That's, of course, the Borsa Istanbul. Turkish stocks had hit a circuit breaker. It is now open. It just opened about a few minutes ago. And we are looking at still continued losses for the Borsa Istanbul, but not necessarily to break that 5% decline. They're down about 4.3%. This is the 3-day picture, down 14.5. Again, the idea here being that those declines we see in the lira are starting to spill out into other asset class over this aggressive rate cutting strategy. Again, we're looking at Erdogan attempting to try to stem some of those declines. So far, we're having traders really digesting that and a whipsawed market in the meantime. Now, to our top story, Omicron has become the dominant strain in the U.S. It now accounts for 73% of all sequenced cases, up from around 3% last week. Global recovery now is in question in light of the new risks and uncertainties introduced by the variant. Well, for more, we go to our senior pharma analyst at Bloomberg Intelligence, Sam Fazeli, who joins us now. Sam, can we take any encouragement from the South Africa data showing that it looked like it peaked pretty quickly and is now backing off in terms of Omicron cases?
Good morning, Danny. I would love to do that because I think that it is the place that Omicron was identified. But I think it's really dangerous to read too much into the data from one country. And we need to be pretty cognizant of the fact that there are very many variables that feed into this information, to this data, people's behaviors, etc., that may not be easily replicated elsewhere. So I hope it's the case everywhere, that basically suggests the virus finds the most vulnerable, does its thing, infect them, and then that's it. It runs out of power or fuel. But I really don't think I want to go that far at the minute.
Fair enough. You know, we did get some positive headlines out yesterday, at least when it came to the Moderna booster, its ability to increase antibodies against the Omicron variant. When we're looking at boosters really being key to combating the new variant, or at least protecting more people against it, do we need to get to a place where a lot of the vaccine type passports, if you will, that countries are issuing, it needs to be, okay, it's not 1 dose, it's not 2 doses, it's 2 plus a booster?
Yeah, so a couple of comments on that. First of all, I am totally unsurprised to have seen the data from Moderna. There is nothing. The shock would have been if it hadn't induced a neutralizing activity, because we'd already seen data for the Moderna vaccine, not from Moderna, but from an independent analysis. So that's that far. The next question really is, well, what do these boosters do in terms of protecting against actual infections? These are all lab-based analyses. So that's what I'm hoping, that it suggests, that it would give us an immunity against an infection, increasing our protection against an infection. We're not talking about severe disease here, for a certain number of months. How long that lasts, we don't know. What is that level of protection with the 3rd dose? We don't know. Is it the same if you had Pfizer before, or Moderna before, or Astra before? We don't really know. Especially Astra, because we've just had some data published that suggests that even against the previous variants, the effectiveness against severe disease even also waned. So that's why I think boosters are critical, certainly for those who had the AstraZeneca vaccine.
You mentioned the difference between infection versus severe disease in terms of what the booster does for protection. Can you get into that a little bit more? What's the importance of that distinction?
Oh, it's critical. And it's got 2 facets. On the one hand, the world is running its business today on the basis of case counts. If cases are high and infections are running at high levels, countries impose restrictions. But what they're all trying to do is to manage the pressure on their healthcare system, which of course is then driven by the severity of the disease. So what the hope is that even 2 doses still continues to provide, at least of the mRNA vaccines, because we just talked about Astra's issue, it still provides pretty good protection against severe disease, so that you don't burden the system with a large inflow of patients. On the other hand, the high levels of infection would impact healthcare workers just like it impacts others, and that might drain the supply of work and people who can actually do the work in the healthcare system. And that would be a separate strain. So I do understand both approaches that have to be considered.
In the UK, we had Boris Johnson, a very long conference yesterday, a very long cabinet meeting, and it didn't lead to any new restrictions. Of course, the UK says we're keeping it on the table. There's the Christmas season to contend with. Can you help us understand the difference in enacting measures today or tomorrow, right now, or waiting until after the Christmas period? How crucial are those few days in terms of acting?
Yeah, I think, Danny, that the government has pretty much set its stall by saying that it is not going to limit people's Christmas. Whether it comes to regret that or not, time will tell. I hope that the pace of infections doesn't do what we just talked about, i.e. raise the number of people who go to hospital, at the same time reducing the number of healthcare workers because they have to self-isolate due to an infection. If that happens, there's no other way of managing it but to put in some pretty severe restrictions.
Sam, before I let you go, I want to ask about one theory that I've heard floated around. Marko Kolanovic, for example, at JP Morgan said this. Of course, he's not an epidemiologist, but this idea that because it's very contagious, but perhaps less virulent, you get back to this idea of herd immunity. Enough people get it, people aren't dying as much, and this sort of brings the end of COVID. What do you make of that assessment?
Yeah, that assessment is based on quite a lot of assumptions, that it's less virulent, that you get an immunity that then protects you against the future infection of another variant, for example. So lots of assumptions there. Remember, these cycles that we've been through, the waves, every time that they happen, I think people had assumed that, okay, but there is a wave, there are lots of infections, then we're through this. It's not necessarily the case. I hope it is. I hope that Omicron is inherently less troublesome, let's put it that way, despite its infectiousness. I hope that we have a situation where, therefore, the severity of disease is even lower by the virtue of a meaningful amount of immunity in the population. And I hope that that other aspect, that the number of people who work in healthcare are not impacted by just basic infections, even if it's not severe, because they can't work. That in its own can have a severe impact on healthcare provision, which would then lead to shutdowns and lockdowns so that that can recover. I don't see a very clear way of assessing that with any kind of model until you see the events unfold.
All right, Sam, thank you so much, as always. That's our senior pharma analyst at Bloomberg Intelligence, Sam Fazeli. Coming up, Nike beats revenue estimates in spite of significant supply chain disruptions. We have the details for you next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Just want to bring you some lines crossing the terminal. Benchmark European power prices surging to another record, this specifically 268 euros per megawatt hour. We've seen the temperature be very cold in Europe. We've also seen supply from Russia become diminished, and at the same time, the wind output hasn't kept up, especially in Germany. So you're looking be it European prices, be it Dutch front-month futures, you're looking at German and French one-year forwards there, we are seeing record prices. Now, from energy to retailers, and Nike reported earnings after the bell on Monday. The world's largest footwear, apparel, and equipment company beat the street's forecast in spite of significant supply chain disruptions. Bloomberg's Laura Wright has the details. So, Laura, we're looking at gains pre-market, gains post-market yesterday. What were the key takeaways?
EPS showed a 31% upside from forecasts, and as predicted, sales were robust in EMEA and North America. That was able to offset weak revenue out of China. Revenue down 20% year on year in Greater China. That is because of lower consumer confidence, aversion to Western brands due to geopolitical tensions. Gross margin full-year guidance was increased by 150 basis points. Remember, the single greatest contributing factor for gross margin is price deductions. At Nike, inventory is tight, which mitigates this. Investors were eager to hear about Southeast Asian manufacturing and specifically Vietnam. Over the summer, Nike had to shut down production at its Vietnam facilities due to COVID restrictions. And on the earnings call, the CFO outlined that manufacturing in Vietnam is around 80% of pre-closure volume. So all of this, as you mentioned, leading to continued momentum in the pre-market.
Okay, so we have that momentum, but how did analysts react who cover the stock? Were they as positive?
Overall, analysts are overwhelmingly bullish on the stock. And one analyst who I spoke to from Morgan Stanley, Kimberly Greenberger, outlined that Nike's ability to outpace consensus forecasts and deliver on its guidance against this backdrop of unprecedented volatility lends credibility to the path back to the long-term targets outlined in June. Morgan Stanley, they like Nike's transition toward a direct-to-consumer model, digitalization. Interestingly, Nike CEO was formerly the CEO of eBay. So he has, John Donahoe, that is, experience in this field. And we are seeing a read across right now in Europe from Nike's European competitors, all in the green right now. JD Sports, Adidas, and Puma.
Laura, thank you so much. Great reporting there. That's Bloomberg's Laura Wright. To dig into the retail story more, we're joined by Stacey Widlitz, founder and president of SW Retail Advisors. Stacey, thank you so much for joining. So Laura there was just giving us an overview of Nike, pretty positive reaction pre-market. What were your takeaways from what they announced in their earnings yesterday?
Well, Danny, I think if you look at the composition of the numbers, their DTC or their direct business that they own is up 8%, while their wholesale business is down mid-single digits. So they've taken this opportunity during inventory shortages to allocate product to themselves, their direct business, which is higher margin. We know that over the past 4 years, Nike has been they're reducing their wholesale partners, right? Because it's a lower margin business. And those are the partners that tend to promote. So the mix shift here has been accelerated during COVID due to inventory shortages, which, as you just outlined, has been incredible for the gross margin, which was up almost 300 basis points this quarter alone.
Yeah, I love what you write in your notes before the show, Stacey. You said the brand could look more like a luxury player. I mean, that's really fascinating. How much of a deviation is this model from what Nike and, frankly, most of the retailers in their industry do?
Well, this is kind of, the dream to have this mix shift from wholesale to DTC accelerated. And, if you look at it, could Nike get to 60% DTC in the next few years? Absolutely. And that's their goal. But what I've said is this brand could actually get perhaps to 75%. And then we start looking like a luxury brand, right? They've been decreasing their exposure to wholesale to control the brand, control the pricing. So I think that's what we look like in 3 to 5 years here. And that's a huge change for this brand. And as a result, I think we've seen the greatest retraining of the consumer because there are no promotions in the market. The big questions is what happens next year when inventory normalizes. Nike is perhaps one of the brands that has the opportunity to maintain full price selling despite when inventories loosen up.
What about from that demand side, though, in terms of consumers still willing to pay up more? We've seen the savings rate start to fall, especially in the U.S., of course, where Nike saw rising sales. Does that present a threat to Nike and really many of the retailers?
Yeah, I mean, we've seen through COVID, obviously, the savings rate spike and people are spending. There's pent-up demand. We've had massive stimulus over the last 2 years. So those are all issues that we have to look for as we anniversary those into 2022. But I think Nike, you're not only seeing the unit demand, but again, the consumer is willing to pay up. If you think about it, everybody was talking this year that Black Friday is dead. Black Friday was not dead. In Europe and North America, Nike's business was up 20%. And by the way, there were no promotions. So that shows you that consumer, even though they were out looking for the bargain and didn't find it, completely willing to pay full price for this brand.
Yeah, and I always just wonder whether people are buying these clothes just to lay around in or actually work out. But Stacey, I also want to ask you, since we have you with us, you're also an angel investor in a lot of the fintech and consumer space. Where are you seeing the greatest amount of innovation here?
I think one of the most interesting segments is resale and what we're seeing. You've seen so many of the brands, whether it's Levi's or Lululemon, say, we're going to take this business inside. We're not going to allow a third party to control this. They're doing that through a partner called Trove. And that's been a huge win for their businesses. They're acquiring new customers, younger customers, bringing them into the brand through resale, but then moving them up to retail. So I think that's where, some of the brands are really saying, we're not going to allow third-party platforms to do this for us anymore. We're going to do it ourselves.
And so this is a lot of adaptation, whether it be what you're just describing, whether it be Nike going to direct to consumer. When we're past a COVID era, what is going to be the lasting impact on how these retailers operate because they've tried to adapt to cope with the COVID environment?
So I think the thing that retailers have learned, and they learned very quickly early in the game, was there has to be a way to shorten your lead times. And we learned that with COVID, when there's such a massive disruption, you get stuck with all these inventory, you have to clear it out. And they've gotten a lot smarter, whether it's using technology, using AI to push smarter promotions, and of course, lowering their lead times. So I think this has been an incredible learning experience for retail. And as a result, we enter 2022 perhaps with smaller brands from a revenue perspective, but higher margin brands. And hopefully that's sustainable if we don't return to our old ways of promoting.
Right. And everyone hopes we don't return to our old ways, especially the COVID ways. Stacey, thank you so much. Really appreciate you joining us. Stacey Widlitz, founder and president of SW Retail Advisors. Now, coming up, the Turkish Lira continues confounding markets as stocks fall and trigger a circuit breaker. Now, Lira heading towards gains. We'll look at what's driving the moves next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, the Turkish lira has whipsawed today after yesterday staging its biggest rally since the 1980s. The jump came after President Erdogan announced new measures to bolster the currency. Joining me to discuss from our Amsterdam bureau is our Amsterdam bureau chief and former Turkish government and economy reporter, Can Koç. So, Can, what are the measures that President Erdogan announced last night, and what do they mean?
So, Turkish President Erdogan announced a series of measures last night to stop the bleeding in the currency. The most important measure was that the introduction of foreign currency index deposits. So how does this new measure work? He said the government will make up for losses incurred by holders of lira deposits should the lira's decline against hard currencies like the dollar exceed interest rates promised by banks. The details on maturities and when it will start are yet to be announced. But we know for a fact that the measure is intended to mitigate investors' demand for dollars and bring to an end months of turmoil for the nation's currency. But just how local investors will react in the coming days and whether the new policies will be sustainable still remains to be seen. Some analysts say until interest rates provide an anchor against inflation, there may still be volatility, and the lira may continue to face more headwinds. Some others raised the concern that this policy could create a burden on the budget and finances if the lira depreciates again. It is important to note that inflation stands at more than 20% as of November and is expected to accelerate this month. And the benchmark rate is at 14%. So Turkey is offering one of the lowest real interest rates among its peers in the world. And the currency's collapse so far has fed into consumer prices, resulting in rampant inflation that supermarket employees were barely able to keep up with changing labels.
Right. Well, Can, so less than a minute here, but quickly, what do you make of the volatility in the Turkish lira and these equity markets? I mean, it really is changing minute to minute, whether the lira is gaining or falling.
Right. So the lira swung wildly after rallying nearly 50% this week as investors weighed the sustainability of government's measures. It fell 7% after soaring as much as 20% earlier today. And it's still much stronger than yesterday's record level. But the swings show that there's still a lot of volatility. The currency had lost about half of its value against the dollar since September. With declines gaining pace after Erdogan said his economic model relies on lower interest rates and cheaper currency.
Can, thank you so much. We really appreciate it. Can Koç, our Amsterdam bureau chief and former Turkish government reporter. That's it for us here at Bloomberg Surveillance Early Edition. Will continue in the next hour. Anna Edwards joins me in London with Kailey Leinz in New York. This is Bloomberg.
The markets right now are caught between a rock and a hard place.
We are seeing this mismatch between fiscal stimulus and central bank support winding down.
The severity of this variant, is not going to put us back to where we were 18 months ago.
I think complacency is the biggest risk.
This is Bloomberg Surveillance Early Edition with Anna Edwards, Matt Miller, and Kailey Leinz.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Tuesday, December 21st. Our top stories today. Omicron spreads rapidly through the United States. The coronavirus variant now makes up almost 3/4 of the cases there. The Biden economic agenda may get a second life. The president and Senator Joe Manchin have been in touch, and talks on a compromise could be revived. And a roller coaster ride for the Turkish lira. The currency swings wildly after gaining nearly 50% this week. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards with Danny Berger here in London. Kailey Leinz is with us from New York. Matt Miller is off this week. And Kailey, what a difference a day makes in terms of market sentiment. Yes, on the fiscal side in the US, but mysteriously around Omicron, even though we haven't had necessarily any better news flow on the latter.
Maybe just people taking the opportunity to buy yesterday's dip, Anna, because certainly you are seeing something of a rebound taking shape today. That was true in the Asian session overnight. After 2 days of losses, the MSCI Asia Pacific Index actually rose a little more than 1%. And some of the outperformers within Asian equities actually were Chinese property developers. The CSI 300 Real Estate Index up 4.5%, recovering some steep losses yesterday. Of course, a lot of questions remain about that sector in particular. But all that positive sentiment also bleeding into the commodity complex, and iron ore futures up for a fourth day in a row. Futures up about 2.25% in Singapore to 127. And then I would just point out that obviously Australia, as an iron-sensitive economy, you are seeing some strength for the Aussie dollar today, but yields are climbing higher to the tune of about 6 basis points on the Australian 10-year after we saw minutes out of the RBA that signals their taper could wrap up by May of next year. Now, here in the U.S., of course, you are seeing that dip buying action as well. We are off of session highs when it comes to the futures picture, but nonetheless, S&P E-minis right now up about 0.5%. In the bond market, not a whole lot of movement. We are essentially unchanged on the 10-year Treasury yield at 142. Crude trying to recover after 2 days of relatively steep losses. Right now, WTI trading at 68.78 a barrel. And then I would point out better risk sentiment, no surprise, translates into a better picture for Bitcoin, Danny. It's up about 3.5% to $48,600.
Well, if it's a turnaround Tuesday for Bitcoin, it's also a turnaround Tuesday for these European equity markets. Much like the U.S., we are off our session highs, gains 0.4% for the DAX, 0.3% for the CAC. I should point out Borsa Istanbul getting crushed, down 6%. This after Erdogan stepped into the market as government, trying to give support to the lira, essentially telling retail savers we'll protect you against those fluctuations. So if we dive into what some of the sectors are doing, what the currency itself is doing, it's been fluctuating between gains and losses. At the moment, the lira is gaining. Just an hour ago, it was posting losses. So a lot of volatility. The other thing to note, European natural gas prices at an all-time high. It is very, very cold in the region. At the same time, Russia's supply is dwindling and German wind power is down. So, Anna, these taking off, skyrocketing, you might even say, and we're also have our attention to some other rockets as well.
Yeah, very nice segue, Danny, making it easy for me. Yes, let's go to something a little bit different this morning. We're bringing you live pictures from the Kennedy Space Center over in Florida. In minutes, SpaceX is set to launch its 24th cargo resupply mission for NASA to the International Space Station, that orbiting science lab. On board the Dragon spacecraft are a variety of scientific experiments. For more on this mission, we're joined by Bloomberg Intelligence analyst Matt Bloxham. Matt, good to speak to you. So as we watch these live pictures, we'll listen in for the countdown. Remind us what this mission is all about.
Yeah, so this is a fairly kind of routine mission to just essentially, as you said, resupply the space station with a range of experiments, but also essential supplies for the crew that's on there and replace some parts that normally live on the space station. There's some interesting experiments on there this time, which are actually quite heavily focused around humans' future in space and how we do long deep space missions. So there's a bioprinting kind of medical device. So if you get a cut or something in space, you can use your own cells to actually kind of create a bio bandage. That's quite interesting. There's even a kind of a space detergent, so they can kind of wash their clothes up there, and various other experiments around how plants live in space and how you can make alloys in space and make them more effectively. So quite an interesting set of experiments on this launch.
Well, and speaking of SpaceX specifically and the technology involved in this, the Dragon that is supporting this mission previously supported the 22nd Commercial Resupply Services mission. Has SpaceX proven the viability of reusable rocket technology?
Yeah, absolutely. Certainly with this current generation. So it's that Dragon capsule sitting on top of a Falcon 9 rocket. The Falcon 9 is essentially now the workhorse of certainly American space launches. That they've put up a number of missions in December, including 2 Starlink rockets, which is their broadband satellite network. So yeah, very much. And we should see today that this is a new Falcon 9 rocket, but they tend to use those a number of times, and that will be coming back and making a spectacular landing somewhere, shortly after launch, and they'll reuse that again for another mission in the near future. So yeah, very much a proven reusable system. But the next generation of Starship is where they're actually putting a lot of their investment dollars now.
Matt, it doesn't feel like that long ago that we had SpaceX taking two astronauts into the air, two NASA astronauts. It was, of course, in May of last year. How has the relationship between SpaceX and NASA evolved?
Yeah, I mean, I think it's an incredibly positive relationship, and obviously it's been a bit contentious, but NASA awarded them an almost $3 billion contract to be the first commercial supplier of a moon landing system, which they hope to do in 2024. Obviously, that was there was some resistance there from Blue Origin, the Jeff Bezos-backed rival, but a court ruled that NASA can go ahead with that contract. So it's all full steam ahead. So that's going to really help SpaceX development and really kind of cements that partnership between NASA and SpaceX, which now covers a really broad range of projects.
Matt, thank you very much. Stay with us. Bloomberg intelligence analyst Matt Bloxham, and he is our go-to guy when it comes to covering these SpaceX launches. We'll stick with this imagery for now. We're 30 seconds until launch on this SpaceX cargo mission to the International Space Station, bringing you these live pictures, 5:07 a.m. over in Florida at the Kennedy Space Center. As we were just hearing from Matt, the Falcon 9 first stage, that is the part that comes back down to Earth. We will stay with these pictures until we get that happening. So let's listen in to these live pictures.
7, 6, 5, 4, 3, 2, 1, 0. Ignition.
Liftoff. Cargo Dragon soars with the final supply run in 2021 for the astronauts aboard the International Space Station.
Downrange. Stage 1 chamber pressure is nominal.
So we are watching, and for our radio listeners, the launch has happened. We are about 1 minute into it now. In about 10 seconds, we do expect max Q, which is the moment of peak mechanical stress on the rocket. That should be happening right now, about 1 minute and 12 seconds into the launch. Then in about 1 minute and 12 seconds of time, we will expect the first stage main engine cutoff. Then the first and second stages will separate. That second stage engine will start, and then you will start to see, in theory, that Falcon 9 rocket making its way back to Earth. Matt Bloxham, I want to bring you back in here as we watch all of this unfold. It seems that a lot of these missions have gone exactly right for SpaceX. When was the last time one of these did not work out?
Oh, goodness, Christian, I can't even remember. It's that long ago. I really can't remember any of these things being anything other than routine. The biggest glitch we tend to have now, as in many parts of life, is the weather. And I think even this launch, we weren't sure until the last minute whether the weather was going to let them go ahead with it. So, that's really been the big issue for the last couple of years, for sure. The kind of issues that SpaceX has is probably more around the Starship project, which is their next rocket, where they're still testing that.
And we are still looking at pictures. We're about just a few seconds away from the main engine cutoff. Again, this is the process of eventually returning the rocket back down. So we're looking at those pictures now. Matt, I do wonder, when we look at companies like SpaceX, we look at these other rocket missions, be it Blue Origin or others, what does the mix look like for profitability in terms of cooperating with NASA versus commercial flight?
Well, I think certainly for SpaceX, it's quite a interdependent kind of financial system, if you like. Their business model is, a mixture of, using these NASA projects. There's these $3 billion they'll get from NASA for the next Mars mission, for the moon mission, will help SpaceX's own ambitions to take people to Mars. So they'll be using that money to fund their own R&D, which I guess hopefully ultimately they will kind of turn into a commercial program of their own. But all the developments then they'll be able to feed back into future NASA missions, which will kind of help that kind of broader kind of national kind of government project. So yeah, very, very mixed. But certainly the kind of reusability aspect is what's been really key for SpaceX to make space flight profitable for them, but also accessible for a much broader range of companies. We've seen a huge number of satellites go up into space in the last year or two, partly on the back of the SpaceX missions, and we're seeing lots more kind of satellite observation of the Earth, Internet of Things system. So it's kind of really opened up space as an opportunity for a much broader range of commercial interests.
Okay, so commercial interest focus there. Just to explain what we've been watching, the main engine cut-off and separation, we've seen that, the successful ignition of the Merlin vacuum engine. The first stage is now making its way back to Earth. The right-hand side is the Merlin vacuum engine. So we'll keep you up to date with what we're watching at the moment. Matt, this is taking science experiments, it's cargo in other forms as well, perhaps, to the International Space Station, but also science experiments. What role do these experiments that take place on the ISS, this orbiting science lab, what role do they play in furthering our understanding? A lot of this focused on medicine, I understand.
Yeah, it does. And I think one of the big things I've noticed with this mission is that historic missions, a lot of the science has been around doing things in zero or microgravity that advance, science on Earth, both kind of medical and commercial. And we see that again here. But I think, as I mentioned earlier, a lot of these projects on the today's mission are actually more about how do we kind of take forward space exploration to the next level, and particularly supporting humans on longer distance transportation. So this kind of bioprinting kind of bandage that they're doing, that's definitely for kind of accelerating wound healing in space, but clearly will be applicable on Earth. Similarly, understanding the stress on plants in space, that these are issues that are really about kind of pushing forward the human endeavor in space.
So I do want to follow up on that, but first I just want to let our radio listeners and viewers know exactly what we're watching. We've seen the first of the two burners, which is on the left side. That's about to start to guide back to Earth. A minute later, we'll see a second burn. That's the landing burn. So Matt, you talk about how a lot of what's brought up there, the cargo, is for space exploration. One of the things I find very interesting is that they've brought up Tide to Go pens and Tide to Go wipes, the cleaning product. Why?
Yeah, so again, this kind of ties back. So, astronauts need to wear clothes when they're up there. They don't have washing machines, and there's also limited space on these resupplies. So, they have to kind of re-wear clothes and be quite careful about, what they're wearing and how often. But, and they have to wait for the next rocket to come up to give them some fresh clothes. So the idea here is, not just for the ISS, but for, kind of future space travelers. Well, how do you actually kind of wash clothes in a zero gravity environment where you don't have traditional washing machine and water and all those things? So this is an experiment with Tide to kind of come up with a totally biodegradable detergent that will work in microgravity and not create all sorts of kind of unwanted byproducts. So another example of all of these kind of minute details you need to think about if you're going to actually send people on long duration journeys in space. But inevitably, I'm sure Tide will find some uses and benefits of this on Earth, and obviously having something that's completely biodegradable is very relevant to the times we live on Earth, and being much more environmentally sensitive.
All right, and just to keep our radio listeners up to date on what we're watching, we did just watch the first stage entry burn start and complete. So burn 1 of 2 is complete. We're about 60 seconds from the landing of the vehicle. It will be landing on the Just Read the Instructions drone ship in the Atlantic Ocean. Right now, we're about 10 kilometers from Earth. Now we're about 20 seconds to that landing. In about 20 seconds will be that first stage landing burn start. That will expect the second stage engine cutoff to be around 8 minutes and 40 seconds into the launch, which is in about 30 seconds time. We understand right now that the landing burn is indeed imminent. As we watch all of this and listen to all of this playing out, Matt, I'm struck by the fact that yesterday was the second birthday to the U.S. Space Force, which obviously operates separately from NASA. But what kind of relationship does SpaceX have with that military branch of the United States?
Not a huge amount, I don't think. I think so. SpaceX's relationships much more been with kind of NASA and the crewed and uncrewed missions to the space station, and in future certainly to the moon. Now, I mean, SpaceX does do a lot of kind of military work in the US, but that's been tied more to their Starlink broadband system.
Interesting. All right, Matt Bloxham, thank you so much. And we have just watched that landing on the Just Read the Instructions drone ship in the Atlantic Ocean. So the Falcon 9 rocket
name
has returned to Earth. I do love the name. Very creative.
They read the instructions, apparently.
Matt Bloxham, thank you so much for taking us through that launch. Again, that was the launch of the 24th Commercial Resupply Services Falcon 9 SpaceX rocket to the International Space Station. But let's bring it back to Earth now, where the Omicron variant has become the dominant strain in the U.S., accounting for 73% of COVID cases. And elsewhere, the number of Londoners hospitalized with coronavirus is rising sharply. Boris Johnson, though, held off from introducing extra virus measures and said he'll leave it open the prospect that they'll be needed soon.
The situation is extremely difficult, and the arguments either way are very, very finely balanced. We agreed that we should keep the data from now on under constant review, keep following it hour by hour.
Let's get more now with Sam Fazeli, Senior Pharmaceuticals Analyst for Bloomberg Intelligence. Sam, given how quickly Omicron is spreading, is the only real way to stop it lockdowns or more restrictions?
Yeah, good morning. So if you really want to stop it, then there's not really any other way of doing it. The boosters are doing a fantastic job. People are lining up to take those shots, but they take time to actually make an impact. And the question really that we have to consider is not just whether lots of people are ending up in hospital, which I hope is not the case, and I hope that the severity that the virus does cause is indeed lower, although more data is needed to show that. But the problem is that the healthcare workers themselves are exposed to the virus. This is a highly infectious virus that then causes problems for people actually being able to work with the 10-day isolation, even if it's not very severe. So that's the biggest question that the government needs to address. And as soon as they see pressure on that, I suspect they will have to act.
Good morning to you, Sam. I wonder what clues we're still getting from South Africa. One of our colleagues told me earlier, we've got a 2-week lag between South Africa and the UK, and then another week lag between the UK and the United States. So if that's how we're looking at this, then we continue to maybe get clues from South Africa. Some of the infection data moving very much in the right direction in South Africa now, but unfortunately the mortality, the deaths, moving in the wrong direction. But what can we say about how quickly deaths, or to what level deaths will rise here versus previous waves? Do we see any clues in the charts?
Yeah, so Anna, the problem with deaths is that, of course, there's a lot that goes into that final outcome, unfortunately. The quality of care, which I'm not for a second suggesting is not good in South Africa, but it will vary country by country. Quality of care, access to medicines, and a whole host of other issues. So I'm actually not looking at deaths in terms of a barometer of severity. Of course, if they become enormously high, then of course you have to start looking at them. But at the minute, I think all we're seeing in South Africa is what was expected. It takes 3 to 4 weeks for patients, unfortunately, to end up in that position. So that's what we're seeing now, I think. You look at the hospitalization data that my colleagues update, that's just the usual cycle that you see with the Monday jump. And I don't see anything in there that's changed the trajectory of what South Africa has been telling us, which is, at least there, the severity of the wave is lower than it was for Delta.
All right, thank you so much for the insight, Sam Fazeli, Senior Pharmaceuticals Analyst for Bloomberg Intelligence. And President Joe Biden is set to warn the U.S. of the perils of remaining unvaccinated against the coronavirus in a planned speech later today. The U.S. is currently experiencing a surge in cases of the Omicron variant. Joining us now is Anne-Marie Horder, Bloomberg Washington correspondent. And we've gotten some details, Anne-Marie, of what he's going to say, including 500 million tests that will be given out. But he is not expected to announce new lockdowns or restrictions. Is that just politically impossible here in the States?
Yeah, it does seem like there's literally no appetite at all for the U.S. to go back to those draconian measures we saw last year, and that even some European countries are starting to tap again. And what this speech is really going to talk about is what the administration plans to do in terms of hospitals, testing, and vaccines. So for hospitals, the president's going to talk about that he spoke with Secretary of Defense Lloyd Austin to have ready 1,000 service members to help with some of these hospitalizations that we could potentially see a rise in, given the rise in cases now in January and February. When it comes to testing, Kailey, you mentioned those 500 million free tests that can be sent out. There's been a lot of criticism on this administration and why they weren't doing that already. I remember a year ago being sent a test in London from the NHS. So really taking a cue there from what Europe's doing. And then finally, also vaccines. How can they have mobile units and more pop-up vaccine stations to make sure that those who aren't vaccinated have access, but also those have a booster? Sam was just saying the booster does seem to be working and help defend this new variant.
Anne-Marie, I remember those days of you in London as well. Definitely miss them a bit. But elsewhere where you are in Washington, Bloomberg learned that on Sunday, just hours after the senator from West Virginia, Joe Manchin, spoke on Fox News saying he wouldn't support the Build Back Better bill, he held a call with President Joe Biden. How far does that phone call, or could a single phone call go in reviving talks?
Well, it does seem like we went from a hard no on Sunday on Fox News from Senator Manchin to potentially a maybe. So our reporting shows that the White House thinks potentially the door is open for the senator to get on board with some sort of package in the new year. And what we are learning is that what he privately told the president prior to that phone call, 5 days before that on Tuesday when they met, was that he would be for a revenue measures overhaul. Many Democrats really want to undo the Trump-era tax cuts, and also 10 years of fully funding pre-K. But a lot of this is going to come down to is those child tax credits. They expire just in a few days, the end of this year. The Treasury just sent out their final checks. It's something that is part of the president's ambition for this package, and it does seem like this is going to be a big hurdle for Senator Joe Manchin to get on board of.
Anne-Marie, thank you very much. Bloomberg's Anne-Marie Horder with the latest from Washington. For the latest market action, we're joined now by Ksenia Galuchko, Bloomberg EMEA Equities team leader. Ksenia, one of the focuses for us, yes, on Turkish stocks, but also on Turkish currency this morning. How much are you focused, are you sidetracked by incredible volatility going on in Turkey? We saw a 23% gain in the Turkish Lira yesterday, and today I have to keep checking minute by minute, where is the Turkish currency at? Because it gained 10% earlier, lost 4% following that. Now it's up another 5%.
Absolutely. It remains such a crazy market. It's been a very interesting journey. So just like you said, the lira surged yesterday and the stock market recovered on Erdogan's plans to support the lira and deposit holders of lira holdings. At the same time, today, investors came back and the lira has been very volatile, sinking and rising during the day. The stock market has dropped again, triggering more circuit breakers and being halted for the third day in a row. The sense we're getting from investors and strategists is that until the central bank and Erdogan start raising rates in the country, there will be no confidence in the assets, including the lira and the stock market. So, and none of these measures, including the plan that he introduced yesterday, are really going to offer long-term support for the currency and the stock market. Investors are really looking for those orthodox methods.
So, Ksenia, obviously the Turkish volatility is a little bit more pronounced, but that is not the only area in which we are seeing volatility. It's really true for global equities, but some dip buying is coming in today. Are all of these moves just exacerbated by thinner liquidity ahead of the holidays?
Absolutely. Yes. So we're paying attention to the stock market moves this week, but not too much, to be honest. Of course, the 3-day declines we saw through Monday were quite significant, and lockdowns imposed in the Netherlands and considerations of lockdowns in the UK and Germany are quite serious and are having an impact. At the same time, the liquidity and volumes are very low ahead of the holidays. None of the major asset managers are going to make sharp asset allocations at the moment because they, for the most part, have closed this year with really fantastic returns of over 20% in some of the major markets like Europe and the US. So it really doesn't make sense for them to make any sharp moves at the moment. And obviously, the U.S. economic deal remains very much in focus. But UBS Global Wealth Management came out this morning and said, actually, even if the bill doesn't pass, it's not going to be that big of a deal because investors are primarily focused on the Fed and accommodative policies for next year.
Okay, Ksenia, thanks very much. Ksenia Galushko there from Bloomberg with a different perspective on the significance of Build Back Better for next year and the next year economy in the United States. Coming up, we'll talk about how all of this Omicron and fiscal stimulus adds up for the global economy. Raffaella Tenconi, Wood & Company chief economist, joins us. And Dominic Bunning, HSBC senior FX strategist, joins us. The dollar in the driver's seat. Does that continue next year? This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Danny Berger in London, Kailey Leinz in New York. Matt Miller is off today. Danny, risk appetite back to the fore today after the heavy selling of risk assets yesterday. We see risk assets moving to the upside, so stocks moving higher and the like. But really, it's the energy markets that have caught our attention in the last half hour. We see European gas prices surging to yet another record. And actually, gas not flowing from Russia, not just not flowing from Russia, but actually flowing in the opposite direction this morning.
Right, exactly. Some of those reverse flows. So it's Russia, it's cold weather, it's also German wind power. This is a story that had happened in the UK, not producing as much. It was really interesting. I was talking with Amrita Sen of Energy Aspects earlier today, and she says what needs to happen in order to stabilize this market is to see demand destruction. So fertilizer companies, for example, not using up as much energy. But we haven't seen that despite the fact that prices are so high and consumers are paying a lot as well. So if this isn't causing demand destruction, I mean, what will?
Yeah, absolutely. And I was talking to our energy editor earlier on who was saying, yes, there's LNG and you can get gas that way. And increasingly in the last 10 years, we've seen a much more global market in LNG and diverted cargoes from Asia into Europe. But that comes at a really high price. And now European countries perhaps having to tap their depleted storage to try and get their hands on the gas that they need. So that's the commodity story, Kailey, that we're watching here in Europe. We're also watching this return of risk appetite today, certainly in contrast to yesterday, but we are in those thin markets ahead of the holidays. What are you seeing before the start of U.S. trade?
Yeah, maybe no stabilization in gas prices, but you are seeing some signs of stabilization in equities. In Europe, they are higher, and in U.S. futures trading, they are higher as well. Granted, we are off the highs of the session, but still we're up about 0.75% when it comes to NASDAQ 100 futures specifically. So it really is big tech that seems like it's leading the way today. The question is, will the dip buying last? Because as Anna said, it's very close to the holidays. Liquidity is thin. Therefore, any moves in the market can be easily exacerbated. You aren't seeing any outsized moves, though, when it comes to the bond market. The 10-year Treasury yield is higher, but by less than 2 basis points. We're sitting at 144 right now, and crude is trying to stabilize as well after 2 days of steep losses, down 5% in the past 2 days. But this morning, WTI futures up about 1 percentage point. Right now, we're trading at $69.33 a barrel. And then, of course, we've been talking about it all morning. We've really been talking about it for days and weeks. The Turkish Lira has seen some wild swings. At one point, we crossed 18 to the dollar yesterday. Record weakness as Erdogan talked about more rate cuts. Then the government came in with some steps to shore up the currency. You saw a huge rally. Right now, the dollar is weaker against the lira by about 4 percentage points. We're back below 13. As for some movers in pre-market trading, we do have a couple earnings stories we need to talk about. One being Micron, the chip maker, reporting a really bullish outlook because of strong demand for its memory chips. So it's up about 6.5%. Nike, strong quarter as well, thanks to U.S. growth, even though China was down about 20%. That stock is higher by more than 3%. Citrix Systems is higher. This is on news that Elliott Investment Management and Vista Equity Partners are weighing a joint bid for that software company. So it's up about 4.5%. And then basically anything tied to Bitcoin is higher today, Danny, as you are seeing that partake in the risk rally. So Coinbase, one example, it's higher by about 2.5% before the bell.
So, Kailey, you mentioned the lira, and I really want to focus in on that because at the moment it is the problem child of perhaps not just of the FX world, but of every single asset at this moment. So I want to pull up this chart. David Ingalls made this chart from our Hong Kong team. For our radio listeners, it is an 8-session chart, just a line chart of the dollar lira cross. But there are boxes on here, and each of those boxes illustrate whether this is the Tokyo session, the London session, or the New York session. So, Kailey, you mentioned yesterday, Erdogan brings in these measures to help stabilize the currency, essentially telling savers that the government will compensate for any losses that they face due to the swing in the currency. So making them more confident in the lira, not necessarily a grabbing for dollars. Now, the big gains we saw in the lira, again, for our radio listeners, we see this big move in the dollar lira cross. It goes down because the lira is gaining, but that happened really when London was closed and during the U.S. hours. So it wasn't necessarily European traders trading that. Now, as Europe has opened, we've gotten these wild swings in the lira today. Started with 10% gains, moved to 5% losses. Now we're up yet again. So the market is trying to digest this. So how do we make sense of the measures put in place and the swings in the currency? To help us make sense of it, it's Raffaella Tenconi, Wood & Company chief economist, who joins us now. Raffaella, good morning to you. So the measures introduced by Erdogan yesterday to help the retail appetite of lira, how far does this go to help stabilize the region and their currency?
Good morning. It's a temporary patch. It certainly injects confidence in a situation that was very, very tense since last Friday. On the margin, it's probably going to stabilize some of the savings in Turkey. But in the long run, it doesn't tackle any of the 3 problems that Turkey has. First, the economy is growing too much for its potential. So it's just creating inflation for a sustained period of time. Secondly, this promise is not credible because it becomes either unaffordable if they really try to promise FX compensation to all savers, or it becomes counterproductive because you'll be paid in Tier Y liquidity, and that exacerbates the inflation problem. And last but certainly not least, it doesn't really make foreign investors any more comfortable about the mixture of policies delivering. So that is not going to really bring a lot of foreign capital in the country.
Good morning to you, Raffaella. Yes, and on that subject, I mean, do you see anything that can change the broader trajectory for the currency? Do you see us returning to a weaker lira? I mean, we were getting some slightly more comforting signs from CDS, so the cost of insuring against default on Turkish debt a little while ago, just this morning, in fact, coming in from some of the elevated spreads we've seen yesterday, which perhaps was a reflection of people's more confidence in Turkish assets. Do you not see any of that holding then?
I think you will see several weeks of high volatility, and probably this is not the only package that you will see. There are already speculation in the press that there will be more policy announced soon. But I think you will see them of this kind. They're temporary. They're not going to be fundamental. Fundamental, Turkey has to accept that it needs to go through a period of much slower growth. And that, of course, creates more political problems for anybody that has a problem with the balance sheet right now. And I would say ultimately you need a genuine turnaround in the policy mix and probably a change of leadership.
Raffaella, obviously there's some idiosyncratic factors at work in Turkey, but when we look at the broader global economy and the threat that the Omicron variant poses, Bloomberg put out some data today that shows the latest Bloomberg Nowcast showed the global economy expanding just 0.7% in these final 3 months of the year, which is down about half the pace from the previous quarter. How large a growth impact, when all is said and done, do you expect this particular variant to have?
I think we're in a bit of a rough patch. Of course, Omicron has just started. We have the holidays, and this has disrupted a lot of the plans. So I would expect the last part of Q4 of the year and probably maybe the majority of Q1 of 2022 will be impacted. But overall, don't lose track of the fact that there is still tremendous momentum in job creation. We are still in a phase where you have manufacturing expanding, services expanding, profitability is high. We have the push on investment coming from green. So it is a rough patch, but it's nowhere close to be a very significant downturn.
Raffaella, how do you see the trading opportunities on both sides of the Atlantic right now, given the different timing and the opportunity to play the difference in that timing between fiscal and monetary policy in the Eurozone versus the United States?
I think it's an incredible period of time that we will see Eurozone growing faster than the US, perhaps already in Q4 and Q1 of this year, because the Eurozone has more fiscal stimulus and has lower monetary tightening coming. And this will really be a theme for most of next year. So right now, we think it's the right time to think about a strong euro trajectory going all the way to 120, maybe even 122 in the next few months. And in general, also thinking about bond yields and rates. I mean, it may be a tad early, but do think that the Eurozone economy has legs. And therefore, it's not possible that the ECB will keep rates this level for very long.
All right, Raffaella Tenconi of Wood & Company, thank you so much for your global perspective. Euro dollar, by the way, trading just under 113 this morning. And coming up, we'll have more on euro dollar potentially in the different monetary and fiscal stances in different parts of the world with Dominic Bunning, HSBC senior FX strategist. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, Affirm CEO and PayPal co-founder Max Levchin. This is Bloomberg.
I think the dollar's a little bit rich where it is. As I say, I think if you sort of look at where the Fed is relative to economic conditions, I would argue that the Fed is the loosest major central bank on the planet, and that generally means that the currency should depreciate.
That's the view there of Michael Shaul of Market Field Asset Management. Let's get a different view on the dollar. Dominic Bunning, HSBC senior FX strategist, joins us now. We were just hearing the view there that the currency should appreciate, so the dollar looks a little richly valued, should depreciate from here, Dominic. You have a different view. You see a couple of factors supporting the dollar now, and you see them still in place next year. Explain that.
Yeah, look, I don't think the dollar looks particularly overvalued at this point. Yes, we've had a fairly strong run, but I think a lot of the forces that we've seen help the dollar strengthen is still very much in play. So the first of those for us is what's happening with global growth, and we're clearly going through an ongoing slowdown in global growth. Now, that's not, anything like a recession or anything that dramatic, but certainly we've seen in the past that slowing global growth momentum does support those counter-cyclical currencies, of which the dollar is clearly one. And the other thing is what's happening with monetary policy normalization. And, I think the Fed's shift this year has been quite dramatic, actually, towards moving towards that exit, towards that faster tapering pace, and even opening up the possibility of a sort of hike in Q1 next year. So I think while those dynamics are still in play, there's a bit more room for the dollar to strengthen. But we only see relatively modest dollar strength, to be honest, down to around 110 for euro dollar, for example. I think we're getting probably closer to the end of the road now in terms of how far that appreciation has to run for the dollar.
Right, yeah, that's really interesting. I mean, we were just hearing the other view that the dollar should depreciate next year, and that seemed to be based on the fact that actually financial conditions will still remain loose, and our commentator was there saying relative to other economies. How loose do you see financial conditions as remaining, Dominic, in the United States next year, even as we see tightening taking place?
Well, I don't actually think they're going to be quite as loose, but you've got to remember so many things go into that financial conditions type measure. So if US stocks keep going up and up, for example, that kind of loosens financial conditions, but it doesn't necessarily mean the dollar should be weakening. Many people would argue that's a sign of, US outperformance in general, and therefore encourages inflows into the dollar. So I would, move a little bit away from thinking about all of those financial conditions stories. We do think inflation is going to peak out and come down in the second half of next year. That's going to, push real interest rates higher. And especially as the Fed moves towards tightening, that's going to kind of have a double impact there. So I don't think things are going to be quite as loose next year. But even if they are, it's not necessarily a slam dunk to sell the dollar, as we've seen for the last, 6 to 9 months.
Well, to be fair, Dominic, we haven't seen stocks go up and up, at least in the recent week. When we had this market panic, perhaps that's a little too strong of a word, but at least a sell-off in equities and other risk assets. The dollar was very stable. What do you make of that?
I think there's elements whereby, there is a kind of part of the investment community which already has their long dollar positions on. And so the kind of room for some of that risk off type, reaction to those risk off events is maybe not quite as strong. You don't get the same positioning adjustment that sometimes you get, during periods of market crisis. So I think that's one element of it, but also, the dollar's still held up pretty well. And if you look at the performance of the dollar versus your traditional risk on currencies, whether it's emerging markets, whether it's the Aussie, the Kiwi, the CAD, the dollar has still very much been outperforming those currencies. So I don't think it's fair to say that the dollar's kind of losing its safe haven appeal. And I've heard that argument from some people many times over the last 5 to 10 years. And the reality is the dollar still remains one of the best safe havens, one of the most counter-cyclical currencies. And in that slowing environment we're talking about in terms of global growth, that's one of the reasons we do still like it.
Well, to be fair, we didn't really see much movement into the yen yesterday either. So as you say, perhaps not about safe havens. But on that point, that already set dollar positioning, do we see the same in the yen? Does that explain the lack of movement over the past few days for that haven?
Yeah, I'm not so sure that the yen is quite as oversubscribed in terms of long yen positions. I do wonder whether at this time of year, how much people are willing to kind of really push into new positions or not, even when we get some of these movements in equity markets. And again, often instead of looking maybe at, dollar yen, because you've got two safe havens competing there effectively, when you look more at Aussie yen, Kiwi yen, CAD yen, those sorts of trades, they've still very much been tracking the broader risk appetite story for much of the last few months. So look, I don't think risk on, risk off is quite the dominant driver it used to be. We're going more into a world where interest rate differentials matter a bit more, the direction of policy, monetary policy matters a bit more, but you still have those periods, those brief moments when risk on, risk off becomes a strong theme. And if that happens, and when that happens, you would still expect to see, Aussie yen fall, CAD yen fall, and those sorts of behaviors revert to their normal stance.
Okay, Dominic, thanks very much for your time today. Dominic Bunning of HSBC joining us to talk us through his thoughts on FX markets as we get towards the end of 2021 and into 22. Coming up, the deep freeze. Europe braces for energy shortages as colder weather sets in. More next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger with Anna Edwards in London and Kailey Leinz in New York. Now, Europe is bracing for energy shortages as freezing weather sets in, boosting demand and sending prices surging with no relief in sight. Isis Almeida, Bloomberg European Power Team leader, joins us now. Isis, we see record after record for this European energy market. What is the mix contributing to this between demand, supply from Russia, and cold weather?
Yeah, I think that, it's another day of records. We've seen European gas and power prices climb to another record today. We've got a combination of factors, on the power side. You've got a bunch of nuclear outages. EDF has said that they were going to take 4 reactors, accounting for 10% of France's capacity down. On the gas side, you've got Russia supplying less. So you basically have zero flows into the mounted compressor station in Germany, which is like gas flowing through the key Europe pipeline. And we even have reverse flows, which really means that gas, instead of flowing westward from Russia into Germany, is actually flowing back from Germany into Poland to supply demand in Poland. So it's actually not looking so good in Europe this morning.
Isis, good morning. So if storage is so depleted in Europe, why is gas allowed to leave, Isis?
Yes, that's a great question, and it's a question that we've been trying to ask, and for many months now. I guess there isn't really an obvious answer because Gazprom is meeting all their contractual obligations, and what they're not doing is sending that additional gas that Europe needs. And the situation with storages is actually like already a consequence of last winter. So the previous winter was really cold and storages were very, very depleted. And we've never been able to fill those storages to the same level as we do normally before the start of this winter. So that's a big, that's been the biggest problem with storage. And now with gas moving eastward to Poland, there's even less gas to build up, to go into stocks, and the stockpiles will deplete even faster. I think it's a question that most of the European utilities have not answered so far. Why are they not ordering more?
Isis, one thing that stood out to me, Javier Blas of our energy team put this on Twitter, that we're also seeing January 2023 Dutch front month futures move higher as well. So that's a pricing for over a year out. What is the market signaling if that far into the future we're also getting these price jumps?
Yes, I mean, we've had a repricing of the curve, so all of our forward contracts have surged more than 70% on gas. What the market is really trying to tell you is that this crunch isn't going to end anytime soon. We're going to last into next winter. And part of the reason being is that if we continue to withdraw gas from storages in the same rate that we're withdrawing right now, we're going to end up with record low stockpiles. And, we're going to struggle to fill storages again next summer. As long as we don't have the Nord Stream 2 pipeline, I think Russia is going to continue capping supply. So the market is trying to tell you this isn't going to end anytime soon.
Yeah, and in the meantime, of course, it is very cold here in London and most of Europe. Isis, thank you so much. That's Bloomberg's Isis Almeida. Now let's get a look at what else we're watching today. And Anna, I'm watching for President Biden's speech on Omicron, and he'll deliver it around 1:30 U.S. time. We've gotten some idea from a senior official of what he might say. He might, or he's likely to send 500 million free COVID tests, filling some of that Omicron shortage. We've seen it really here in London as well, in the UK, that those tests have been difficult to find. Also plans to deliver a very stark warning to the unvaccinating and saying, okay, if you've gotten your shots, you can safely gather. So maybe a little bit of a carrot and stick, giving free tests, as well as saying, okay, everybody needs to get vaccinated.
Yeah, needing to get vaccinated. And we have heard him not avoid some pretty harsh language in terms of the unvaccinated, just as we heard from the German health minister some weeks ago. I'm looking at what's going on the COVID story, but here in the UK, Danny, because the UK government set to perhaps speak about some support to business. We certainly heard from one cabinet minister earlier on today that he was pointing out that we'd hear from the Chancellor shortly. And I spoke to the Beer and Pub Association, of course, the hospitality industry really hit by this kind of lockdown, not lockdown that we've got going on in the UK right now. And they were calling for more support, whether that's changes to tax policy, grants for business. But we don't have lockdown measures here in the UK. What we do have is just a mask sort of mandate indoors and various other matters. But it seems as if the public is kind of front-running a change in guidance that might come. A lot of newspapers talking about whether we might see a change on the 27th of December. But we'll see if we get anything from business, because many in the hospitality sector have been crying out, saying, look, you supported us last time. This time, you haven't locked us down. And so there's nothing that comes with that, no support for business.
Well, the CEO of Wetherspoons, who, granted, is always very outspoken when it comes to basically everything, basically said that this is a voluntary lockdown that we're experiencing. And we really feel it here in the city. There aren't as many people around. People are going home on their own accord to protect themselves. So whether or not there are measures introduced, the hospitality sector is already feeling the pain.
Yeah, you wonder what happens on the other side, whether it comes to official lockdown measures or indeed people's attitude, because yes, they're locking down right now to protect themselves or just to protect the holiday season and those family times that they want to have. So Danny, we'll keep following the Omicron story then when it comes to the US president and his message. We'll also follow the UK policy, and we'll have more on Bloomberg Surveillance ahead. We'll be speaking to Dr. Almesh Adalja of Johns Hopkins, so that'll be the medical perspective. We'll get the insights on where we are on Omicron and what we really have learned so far. Andrew Sliman of Morgan Stanley also joins us. This is Bloomberg.